Fed Chair, Vice Chair, I'll say, Richard Clarida, making comments on the Federal Reserve's taper timeline today. In a virtual speech, Clarida saying substantial further progress conditions have, quote, all been met. Joining us now for an exclusive interview is St. Louis Fed President James Bullard. Great to have you back on the show, President Bullard. Welcome.
Great to be here. Thanks for having me.
So is this a go taper at the next meeting in November, an announcement, a vote, and getting ready to scale back that stimulus in your mind?
I'd support starting the taper in November. As you know, I've been advocating trying to get finished with the taper process even by the end of the first quarter next year, because I want to be in position to react to possible upside risk to inflation next year as we try to move out of this pandemic.
What happens if growth slows and the market continues to weaken here? Will that change your view on how fast to taper and how fast to look toward rate hikes?
You know, third quarter growth does, it's been marked down, as you know, following everybody, I think, including the Fed, including me. But I've just pushed out the growth into the fourth quarter and into the first half of next year. So I think the total amount of growth that we'll see will not be diminished. There's still plenty of demand out there. There's plenty of reopening that still has to occur. There's plenty of fiscal support for the economy and monetary support. So I really think that we're still in great shape. I think the pandemic will come under better and better control. We've got technology still going on the pandemic front, pills are on the horizon, booster shots, shots for kids, all kinds of stuff happening. So I think we're still in great shape economy-wise, even though we got a setback from the Delta variant in the third quarter.
That said, are you fearful in any way that the inflation picture will force your hand before perhaps the jobs picture on its own right would warrant tightening?
Yeah, I don't know. On jobs, unemployment rate 4.8%, way more job openings than the number of unemployed. On that dimension, where we've got a hot job market, I think by the time we get to next spring, you could see a 3 handle on the unemployment rate. That would be back to the pre-pandemic level. So I think we're in pretty good shape on labor markets. They'll continue to improve through the next 6 to 9 months as we're tapering. On inflation, I think the story that inflation will come down naturally is a reasonable one, but I only want to put 50% probability on that scenario. And I've got to put some probability on a scenario where inflation stays high or even goes higher in the months ahead. And that's the risk I want to be in position to be able to handle at the end of the taper.
Yeah, I mean, you made quite a splash when you came on CNBC a few months ago after one of the Fed meetings and started talking about 2022 rate hikes right after Powell was super dovish and talking about transitory inflation. Has the Fed, the core of the Fed, moved more toward your view of a rate hike in the coming year?
I think that if you look at the median of the summary of economic projections, there have been more participants moving into 2022 as a possible date of liftoff. I would say that, and the chair has said that we do want to keep the idea of the end of the taper separate, and the tapering generally speaking separate from the date of liftoff, which is, it's a separate decision for the committee, and there's no reason for us to commit one way or the other at this point. But I just want to be in position, in case we have to move sooner, that we're able to do so next year in the spring or summer if we had to do so.